call this meeting to order. Welcome to our Monday Fellowship today. Thank you all for joining. My name is Rotarian Wilson Kamau. I'll be chairing this meeting today. I'm currently serving as the president-elect, so I'm sitting in for our president, Sami Malaki. To start us off, I'd like to invite Rotarian Liz to lead us in the Rotary Grace.
Thank you, Mr. President. Please don't mind the background noise. We are cooking. So we'll say the Rotary Grace. O Lord and giver of all good, we praise thee for our daily food. May Rotary friends and Rotary ways help us serve thee all our days. Amen.
Thank you, Rotarian Liz. It's time for the loyal toast. If you have a glass, charge it. If you don't have a glass, hand over heart. A toast to the President of the Republic of Kenya.
To the President.
It's time now for the four-way test. I will ask Rotarian Mukami to lead us in the four-way test.
Good evening, members.
Good evening.
Thank you, Mr. President. I'll take the test. Of the things we think, say, and do, is it the truth? Is it fair to all concerned? Will it build goodwill and better friendships? Will it be beneficial to all concerned? Thank you.
Thank you, Mokami. It's time for announcements. This month, I'd like to remind Rotarians and members present. This is the month for economic empowerment and community development. So we focus on economic empowerment and community development in the month of October. So as a Rotary Club, we'll endeavor to bring in speakers in that line of work to help us know more about community development and economic empowerment. Allow me to mute somebody's mic here. Okay, good. Our SAA for today will be Rotarian Joki Mainge. And before we go on to the announcements, I'd like to ask that if you are a visiting Rotarian, a guest, please indicate your name on the chat so that we may recognize you at the end of the meeting, please. So if you're a Rotarian, visiting Rotarian, or a guest to the club, please indicate your name on the chat so that we may recognize you as we proceed in the meeting. So to announcement, I'd like to start off with our treasurer, Rotarian Keshi. Please give your announcement.
Good evening. Thank you, Wilson. My announcement is just a reminder to the members about our membership dues. We have at least 34% of us who've not paid even for the first half. Kindly, let's just make our payments. Thank you.
Thank you, Rotarian Keshi. Just to reiterate on that, it's very important that we pay our dues so that we are always in good standing. So remember to pay your dues on time. The next announcement, I'll hand it over to Joki Mange. Rotarian Joki.
Wilson, she had asked me to announce on her behalf, and this is in regards to the Mombasa trip. Members, please be informed, we require your deposits. We are supposed to make a 50% deposit. The trip costs 19,000 shillings per person sharing, and these costs will cater for your meals, your transfers, and your SGR tickets on economy class. So tomorrow we'll be proceeding to the terminus in Syokimau to purchase SGR seats because it's going to be at the end of the month. So we do not want to have a situation whereby people are missing out on their SGR tickets. And then the other remaining portion of the 50% deposit will also take care of deposit to the hotel because they need to block our rooms in good timings. So please remember, guys, we need your deposits so that we can take care of the bookings. Thank you, Mr. President.
Thank you so much. Just a further announcement, just to remind our Rotarians present. This year is coming up next year. For next year, it's in the month of April. Just to remind you, there is the rates for this month up to the end of October are 17,500, and it after the end of October, the rates will go up to I think 20,000. So if you're planning to go, I think you should take advantage of this early time booking to getting on the DCA on the DCA. It will be a fun event. It's gonna be held in Nanyuki. So make time, please register. Let's present our club in full if you can. So this year, next year in Nanyuki. Thank you so much. Just a minute, I need to look for the guest speaker here. But can I take this opportunity to invite AG to greet us for a moment? AG, please say hi to the members.
Okay, thank you very much, PE Wilson. It is good and to be here present for your fellowship, and that the fact that you have a guest speaker. Rotary Club of Madaraka, you're doing great things. And I like the fact that you have a teamwork and that you are development and focusing on the agendas for this year. You've shown that you are being unlimited in all your activities. And for us, that is a plus within the district. My only reminder is that today was the last date for submission of the president's reports to the district, and I hope that has been done. If it has not, please follow it up. Thank you.
Thank you, AG. It's time now today. It's time to listen to our guest speaker for the day. Let me invite our Rotarian Janet to introduce our guest speaker.
Mr. Chair, this is Nalwenge. Kindly give me a few more minutes. I'm trying to log in on my machine and it's giving me hell. Just give me a few more minutes.
Okay, sir. In the meantime, I'd like to invite visiting Rotarians to just say hi to us. Just let me start off with the he has greeted us. There is Marion Iduruma from Kampala Metropolitan. Marion, are you with us? Okay. There's Rotaract Innocent Oko from UNAFIA.
Thank you, PE. Family and friends of Rotary. My name is Innocent Oko from the Great Rotaract Club of UNAFIA. And I would like to announce that our club is having a water tank project. We're planning to put up a water tank at Smile Children's Home in Kayole. And we would really appreciate if you could support. We will share the poster in due time. Thank you.
Okay, thank you, Innocent. Visiting Rotarians, this is your opportunity. Faith, see here, Robert.
President, I would like to help Marion.
Okay, welcome.
She's driving back home.
Okay.
But the name is Namala Kawalia.
Yes, Namala.
And here with Marion Duruma. I've also noticed our past president Nanyonjo is online. They are both driving back home, so they can't speak, but we're here from Kampala Metropolitan and happy to be with you.
Thank you so much for joining us today. Is that Faith Westland?
Yeah, thank you, Mr. President. My dear classmate, glad to be in this assembly today, the fellowship today. My name is Faith Mbutu. I'm here accompanying and supporting our IPP as he gives a talk today. I'm the current president for Rotary Club Westlands. Really glad to be here and looking forward to a great fellowship with you.
Thank you so much. Then Robert Brady Arsimeru.
Thank you, Abomeru. I'm so excited to be part of this, and thank you so much for inviting us. I really appreciate. Looking forward to learn more from this amazing platform. Thank you.
Karibu sana. There is Jacqueline Rotaract Karen.
Yes, hello everyone. My name is Jacqueline. I'm a Rotaractor in Karen. My classification is Research and Data Analytics. I'm so glad to join you.
Thank you for joining us. Anyone else would like who I missed out on? Even guests, yeah, go ahead, sorry.
Good evening, my name is Sheila Nekesa. I'm a lecturer of finance and joining you from Rotary Club of Bungoma. I'm glad to be here.
Thank you.
Good evening, Rotarians, Rotaractors and guests. Kennedy Junje from Rotary Club of Madaraka, and happy to join you. I invited a guest, Alice Mercy, if she could just say a word and just say hi to the guys.
Yes, Kennedy. Thank you, Kennedy. Yes, Alice.
Hi guys, I'm Alice Mercy. I'm a guest. I would love to know more about what happens here, and I'm glad to be here. Thank you.
Karibu sana. Rotaractors, guest, anyone else? Okay, thank you so much. I hope our guest speaker is ready. Willis, is everything okay now?
Still a little bit of struggle. Still a little bit of struggle. I'm trying to get the link and all the, what's it called? All the platform are rejecting. Although I'd already registered, so I don't know what the problem is.
Okay.
Though I can get, I've managed to get to log in on my phone though, but the presentation is on my machine. So just give me a few more minutes, please.
Okay, so thank you so much. So just give me I'll give the floor to any Rotarian or Rotaractor who has an announcement about their club or any activity they'd like participation on. So this is the floor. So if you want to give an announcement, please raise your hand so that I can give you the opportunity to speak. Yes, Rotarian Biama, go ahead.
Rotarian Wilson, thank you so much. My announcement is actually on our Mombasa twinning trip. The Rotary Club of Madaraka, in conjunction with the Rotary Club of Kampala Metropolitan, will be having a twinning trip on the 6th to 8th of November 2020, which is actually next month, to the Voyager Beach Resort, Mombasa. That's right, you heard that right. We'll be heading to Mombasa for a twinning trip, and all of you are actually invited. The costing is only 19,000 Kenya shillings, and the beauty about it is that this actually covers everything from transport train from Nairobi to Mombasa, airport transfers, all your meals, all your drinks, that pricing covers it. And the beauty about it is that we'll be having our brothers and sisters from Uganda, and you guys understand how long we have been training with them and how wonderful all our trips are, just apart from the fun, also the projects that we'll be embarking in Mombasa. And we can't just wait to have all of you guys on it. So if you have any queries, actually we have a WhatsApp group that you can join. Wilson, you can actually share it, maybe perhaps, or I'll do it myself here on the chat. Then that's it. So in other words, as simple as Twende Mombasa. Thank you.
Thank you, Biama. Again, so the trip is not restricted to just Rotarians. Even guests, you're welcome. It will be good to see, just to know that Rotary Club is just not about being serious all the time. We always get a chance to let loose and have some bit of fun. I think, and also as Liz and Biama just also need to add what they said is that there'll be a project that we'll be doing in Mombasa, a small project. So it's always, again, another opportunity to give back. So welcome one and all. We are very interesting trip this November. Thank you very much. So again, as we wait for our guest speaker, any other person with an announcement? Okay. Okay. Again, so thank you. So also another opportunity, if you are visiting Rotarian or guest and you like the opportunity to speak to us, so just greet us and say which club you're from, so that we may recognize you at the end of the meeting. So if you're visiting Rotarian or guest, this is again an opportunity for you to greet people. So if you want, please raise your hand or just shout. Just go ahead and introduce yourself. Yes, Mbogo Peter.
Yes, good evening, Rotarians and family of Rotarian guests. I'm Rotarian Peter Mbogo from Alciembu. Happy to join your fellowship.
Thank you, sir. Thank you so much, Rotarian Peter. Yes, Ronnie.
Good evening, family and friends of Rotary. My name is Ronnie from the Rotaract Club of Westlands. I would like to take this opportunity to also invite you for a trip to Diani, much to go to Mombasa, and then you still want to go back there and go with you guys to Diani later in November.
Sorry, wait. You said which Rotary Club of Westlands? Please also indicate it on the chat, so that I didn't get you so well. So indicate it on the chat so that we don't miss it out. So I think our guest speaker is ready. So allow me to give this opportunity to Janet. Janet, to introduce our guest speaker, so that we can take it off from there. Janet, please go ahead.
Good evening, guys. Welcome to our meeting. I'd like to introduce our speaker for today. His name is Willis Nalwenge, the Senior Research Analyst, Kingdom Securities Limited. Nalwenge, over 5 years experience as a research and investment analyst, having previously worked with KCB Capital Limited, AIB Capital Limited, and Sterling Capital Limited. Before joining the investment industry, Willis gained experience in life insurance with Sanlam Kenya and banking, having worked with Sidian Bank. Nalwenge also has a Bachelor of Arts in Economics and Mathematics from the University of Nairobi, a CI Dealing Certificate from ACI Financial Market Associate, and has passed CISI Level 3 Wealth and Investment Management. He is a chartered member of the CFA Institute and a member of ICIFA. On the social front, Nalwenge is the immediate past president and the current director of projects of the Rotary Club of Westlands. He loves participating in mentoring activities with Plum House Foundation, and he is a fan of Kenya Rugby Club. Sorry?
Just go ahead. Sorry, go ahead.
Sorry?
Go ahead. Just go ahead.
Yeah, okay. I was where Nalwenge is a fan of Kenya Harlequins Rugby Club, AFC Leopards, and Arsenal Football Club. Yeah, that's all.
Okay, thank you very much, Janet. The last part I had to put there, the part for Arsenal, so that every other team can recognize that we're doing good. Anyway, my name is Willis Nalwenge, I've been told. I work for Kingdom Securities. My work is to analyze companies, to figure out which investments and figure out which direction our economy is taking. At the same time, I try to advise clients on what investment to undertake, especially in the stock market or what we financial avenues we have in Kenya. So as I prepare my presentation, I'm still trying to log onto the site so that I can be able to share with you what I'd prepared. But for the time being, I'll just continue with an off-chart presentation and just to try and see if we can be able to interact off visual and only on audio. So basically today I was asked to talk about picking investments. And what we normally do with as investment advisors, where I work, I work for a stockbroker, and our main deal is to work with the Nairobi Stock Exchange, both on listed and unlisted stocks. We also look at the government securities. I'm talking about the treasury bonds and the treasury bills. We also try and advise clients on products like derivatives, so that at least by the time a client gets to leave our office, they know the different products that we hold. We also have a sister company. Kingdom Securities Limited is a subsidiary of the Cooperative Bank Limited. We also have a subsidiary called Co-op Trust Investments, which is the asset management arm of the bank. So whichever product we do not have, we try and advise the clients. So basically, I was just to try, today I want to try and tell you the steps that you normally take before you select the investment arm that you're going to look at. The things that you review as you are being advised as a person, or if you're advising yourself in the arm on investment. So basically, the first thing we normally ask the client is, what is your plan for the investment that you have? What is your dream? What are you planning to do with the money? For example, some people are trying to save money for their school fees. Some people are trying to save money for their cars. A lot of people are trying to save money for their retirement and trying to position the money at the best avenue where it can be able to reap the highest return possible. We also have those clients who are looking for quick returns. They have money, they don't want to hold the money for a long time. It's like a transitional money that they have for a phase of time. So we also tell them where to put that money. So the immediate thing we normally ask a client is, what is your financial plan? What is your goal? Why are you planning to invest? What is your aim, or what are you planning to achieve with whichever period that you have? So with this, it helps us determine the level of risk a client is able to take. For example, if a client comes in and tells you that they have like 100,000 shillings and they're trying to hold the money for a month and they want to go to the stock exchange, we try and advise them against that, and also to try and help them which channel that they can be able to put their money into. The second thing we normally ask the client is their risk appetite. The risk appetite is something very simple. We just ask you, how much money are you willing to lose without panicking? Simple is that you have 100,000 shillings. Of the 100,000 shillings, if it falls to about 75 shillings, will you be willing to exit or will you continue to stay? Considering that in investments, we have a swing with how we can invest funds, meaning that the investment will not always be down, but sometimes when the state of the economy changes, then the levels of investment or the product that a client is holding needs to be shifted around. So the risk appetite of a client will be able to determine which product they're able to take, or how fast or how easy a product that you're giving them they can go in and out. Another thing we also look at is the willingness and the ability to take risk. Okay, what is ability to take risk? Ability to take risk is the essence of what else are you attached to? Do you have, for example, dependents? Do you have liquidity needs, immediate liquidity needs that you need to consider? For example, if you are undergoing a medical treatment, do you have that ability to undertake long-term risk? If you have a large family and you have a small savings, are you able to undertake risk that will be able to cover you for a long time? So that is what we call ability to take risk. Now, the willingness to take risk is also a simple thing that we look at. How much money or how much risk are you able to undertake? There are those people who, like for example, gamblers, they're able to take risk without thinking what will happen if I do not achieve the returns that I've set myself onto. And then at the other side, we have somebody who's above or somebody who has very little savings and they want to invest all that money in an asset that is risky. So we look at it and we see how well we can be able to advise that client in terms of both ability to take the risk and willingness to take the risk. A client might be willing to take a risk as an individual, but is not able to take the risk. For example, if a person is young, let's say between 25 and 30, that individual has a very high appetite in terms of risk, considering that this person is able to get into an investment. If the investment tanks, this individual has enough time to recover that investment. But is the ability to take risk viable? This guy is 25 years old, maybe he's in his first job, maybe at a low salary, and then we know very well that their savings is not at par. So that will be able to curtail their ability despite having the willingness to take risk. Another thing that we review for an individual, and this is again very important, is your human resource vis-a-vis your investment diversification. What do I mean by this? Human resource is why you're employed. If you're a banker, we normally try to advise an individual to avoid investing in a company that he works in, because that's what we take a double risk. For example, anybody who works, if I can take a random company, East African Breweries, then I will be very against advising a client to buy EABL shares. Simple because is that we have a double risk. This person's salary, which is the key source of income, is directly aligned to their investment. So if EABL collapses and the asset value declines, and then this same individual gets fired, that means he has lost 2 lines of incomes and their risk level is double that. But if this person is a doctor who works in a different environment like EABL, then we are able to tell this client that they can invest in a company that is totally different from what they have for themselves. So another good example, and we can really see it in the current environment, is real estate. if you work in the real estate environment, anybody who works in the real estate environment right now will tell you that it is not, for they themselves, might not be the best place for them to invest, considering that they attach their day-to-day bread to their long-term investment. So if the real estate is down as it currently is, then they tend to lose the two avenues of their livelihood. And then we also look at their unique circumstances. Unique circumstances for an individual is something very simple. We look at your religion. There are people who are not willing to invest in particular companies because of their religion background. We know very well that, for example, Muslims do not invest in either tobacco or alcohol companies. They also have the requirements of halal products. So again, if you're advising a client, then it's very important to tell them which halal product they are available. We also have particular individuals who do not invest, or companies who do not invest in environmental friendly companies. As of the moment, we have what we call SDGs, Sustainability Development Goals, which are run by the UN. So most companies have tried to align themselves with the SDGs so that they can be able to create an avenue where it's eco-friendly and people-friendly. So any person who does not think about or has an environment issues, then that is a unique factor that as an investor I should be able to consider while giving them advice. Another important individual or personal issue, we look at the time horizons. A person who's 25 years old and a person who is 70 years old have different asset needs. The person who's 70 years old requires frequent income. They require, for example, money for medication, for their upkeep, and the normal day-to-day financial needs. So that particular client cannot be given the same asset as a 25-year-old. A 25-year-old is a risk appetite guy. This person has enough time to be able to recover. This person maybe lives with the parents, so he does not need the frequent income that is required for, maybe, for example, let's say rent. Their medical needs are very different from a 70-year-old. So those are some of the things that we look at overall. Another thing that we look on a personal review is the side hustle that you have. Now, most of us tend to invest as a side hustle in the same industry that you are in. If you're, for example, a person who works in the market department, then they tend to be consultants in branding and product placement. If a person is working, for example, in the EABL industry, then they think about distribution and maybe alcohol avenues. So with the whole asset package, both in terms of their side hustle, their main hustle, we also need to consider how aligned are they and what is the need, especially in terms of personal concentration on each. And then finally, for an individual, we also need to look at their liquidity needs. Why do we need to look at liquidity needs? Liquidity needs considers the cost of transaction that you're able to maximize on your return. It determines how long one is able to hold a particular asset. For example, if you're looking at the real estate, again, environment, we know that it's very difficult for a client to buy land and to be able to sell that land in a very short time. This is contrary to, for example, if you're buying stocks. If you get into the stock market, it's very easy for an individual to buy and sell their shares without losing the essence value of this particular asset. So the liquidity needs of an individual needs to be put in place just to know that in the near future, what do you need to purchase? How long can we be able to hold this asset without a particular individual panicking? So after reviewing the personal aspect of an investor, we now look at the common class categories of assets that you can be able to place them in. So in Kenya, we have standard assets. Unfortunately, our market is not well diversified to be able to compete with my markets, for example, like South Africa, Egypt, and even the Western world. In Kenya, the key assets that we have, and I'll be able to go at least through a few of them, the ones that are common. We have stocks, that is shares, both local and foreign. We have treasury bills. These are government short-term papers that are normally either 3 months, 6 months, or 1 year. We have treasury bonds. These are, again, government papers that have a long-term holding, 2 years and above. Then we have commercial paper. Commercial paper are like treasury bonds. The only difference between treasury bills. The only difference between treasury bills and commercial papers is that treasury bills are held by the government, while commercial papers are run by private companies. So the need of knowing where to place an individual funds is very key on that front. We also have what we call collective investment schemes. Collective investment schemes, we have examples of unit trust and mutual funds. This is normally for clients who have small savings capabilities. We're talking about maybe 2,000 to maybe 50,000. And also, it also augurs well, sits very well with clients who do not have that investment knowledge. This is a system where you collect the money together and give the money to a professional to be able to handle that money and invest on their behalf. Another thing is that the advantage of collective investment scheme is that this particular client is able to invest in different assets that we are not able to afford. For example, collective investment scheme can invest in land, can be able to invest in treasury bonds, can be able to invest in treasury bills, and can also be able to invest on foreign assets. If you go in as a client and you have only 5,000 shillings that you want to invest in, then it will be very difficult for you to be able to invest on all this in all these assets. But if you go in under the collective investment scheme, then you're able to get a few of that. Another main asset that we consider in Kenya is insurance, both what we call general insurance and life insurance. In life insurance, we mainly focus on savings. For example, those who have education policies, savings policy. We also review a little bit of pension on that front. So again, an asset that you can be able to invest in. The common one, which I believe is the darling of very many working class in Kenya, is the real estate. Real estate is the plotty, whether it's farming real estate, whether it's the 100 by 100 plots that we have, whether we are holding it for speculation purpose or we're planning to build in them. So it remains very key in our asset class. Now, those are the common ones that we have, and an individual can go in as their own investor. We have other assets that are normally professional driven assets. Some of them are like derivatives. Derivatives are just assets that have an underlying base asset that are used to manage risk for an individual. For example, if one wants to buy EABL shares, but they do not know which direction the stock is going to take in the next few months, this individual can be able to go to the derivatives market and be able to see if their speculation is true that the stock will go up. They can be able to position themselves without buying the EABL stock itself. So in derivatives, we invest with the assumption of an underlying assets. And mostly in Kenya, the assets that are underlying is basically the stock holding of a few companies that are in the stock market, or what we call the stock market index, which is a basket of different stocks that help determine the direction of the stock exchange. The other thing that we normally look at is, again, commodities. In Kenya, we have very few commodity markets, and the key ones that we can talk about is coffee and the tea exchange normally that normally happens in Mombasa. So for those who are complicated or very experienced investors can be able to get into this market and be able to make a little bit of money from that fund. And then we have exchange trust funds. Exchange trust funds is just a basket of assets that are pulled together. And in Kenya, the only exchange trust fund, what we call ETF, is the gold ETF that is held, that is normally run through the stock market with the pricing based with the gold that is normally held in South Africa. So basically, those are the common asset categories. So if we compare the asset class, if we compare the personal review and the asset class, then you're able to advise a client where they can be able to place their money. But before we finalize that with the client, we review the asset class, the asset category, and their personal take. What am I talking about now? When reviewing an asset where to place a client, we look at, the first thing we look at is the holding period. How long is this client planning to hold this asset? Is it long term? That means 5 months and above. Remember that when clients come to us, when clients come for advice from a lot of investors, they come and say that they want to invest their funds long term. And when you ask them what long term means, they tell you 6 months to 11 months. In the stock market or any investment scheme, 6 months is considered very, very short term, with very high risk chances, and also undetermined asset returns. So to us, when you talk about long term, we talk about 5 years and above. So when you go to visit, when you're talking to your asset managers, you need to determine what your long term is, what your mid term is, and what your short term is. Mid term, we normally talk about 2 years to 5 years, and short term normally takes between 6 months and maybe 1.5 years to 2 years. So with that, it helps us determine which asset you are able to buy for a client. Another thing we need to tell the client is that some assets have what we call a lockup period. Lockup period means that if you get in, you cannot withdraw your funds for a particular period of time. Now, a good example that has a lockup period is an insurance policy. For those who've ever bought life insurance, they have a clause that says that the minimum period that you can be able to hold that insurance policy is normally 3 years. So that is a lockup period. If you want to withdraw within 3 years, then they tell you that you will not be able to recover any of your money. And then they tell you that after that, there is a period where you can be able to withdraw your money with partial penalties, or even what you can call partial withdrawals. So the lockup period, again, will determine which or how long you're going to hold an asset. And another good example, again, and we have had this controversy in the current market, will be the sit-on high yield assets. I know that in the we've all read the information that we have in the market with regards to what we have under sit-on. What I can say about, and I'm going to maybe to explain this a little bit in detail. The sit-on product is not a wrong product for an investor, but it depends with what is your holding period. Remember that sit-on is basically a real estate company that invests in long-term strategy. So what they do is borrow your money, invest in land or in real estate, and then as they sell the real estate, the margins they make on that is what they use to pay you back. Now, another thing you need to note again is that sit-on has different products. They have products that have short holding period, that is between 3 to 1 year, and those ones they call normal investment products, which can be provided by any asset managers. At the same time, Cyton has a category called high yield investment products. Now, high yield investment product, and this is the product that has been very controversial even when you look in the market. The key thing about high yield is that as much as they're going to give you the high returns in the market, remember that the lockout period is very strict because it's very difficult for them to take your money, invest it, and then you can come on any particular day to withdraw your money. That's the first thing you need to note. Number two is that for those who've done 3 months, 6 months under Cyton, and unfortunately, especially for those who did investment in 2020, we've all seen how the main economy has stand up due to the COVID pandemic. We also know that one of the biggest investment arms that have been hit by the coronavirus is the real estate sector. So it's very unfortunate that Cyton was caught in between a long-term investment strategy and a poor market environment where they're not able to offload their assets. So the lockout period that they had already given to their clients with the promise of high yield returns creates a very controversial event where that for them to be able to pay you that money without defaulting on your side and also them not defaulting on your payment, the best thing is to do is to extend the holding period. Most clients feel like the company is not performing very well. I cannot vouch on that, considering that I haven't looked at their books of account. But the only thing I can say is that their strategy and the strategy for the other fund managers is slightly different, considering that they invest in long-term investment that tend to tie money for a long period of time. Okay, another thing again we need to look at is the return comparison. Return comparison is just, if you look at two assets, which of the two assets will give you the highest return at the lowest risk and at the shortest period of time. For example, treasury bills are government securities, and I've said that there are 3 months, 6 months, and 1 year. At the same time, we have banks' fixed income, fixed deposit products, where they have the 3 months, 6 months, and 1 year. If you look at banks' fixed income returns, they're normally at about 4%, 3% to 4% for about 1 million holding. So if you have 1 million shillings and you want to put it in fixed deposit, then you'll get a return of about 3.5 to about 4%. At the same time, if you give the same money to the government for three months, it will give you approximately 6.5%. So you have a bank deposit that will give you 3.5% and a treasury bill that will give you about 6.5%. So that return comparison is very key for a client to know where they need to put their money to be able to get the best returns at the lowest risk. There's also the essence of timing an asset with relation to the economy. Okay, again, what do I mean with that? When you're trying to buy, and if I can take an example of the stock market, anybody who's traded in the Kenyan stock market knows that any announcement that is made either by the government or an international company that invests in Kenya creates a buzz in the investment world. A good example is I will take the acquisition, a part acquisition of Jubilee Insurance by Allianz Insurance of the German company Allianz. Immediately that was announced, we saw that the stock price of Jubilee Insurance going up. So the moment we get information, then the timing of you entering an asset or exiting an asset is key to ensure that one gets the maximum return. Another good example I will give is that last year, when the government of Kenya announced the repeal of the interest rate cap, which was heavily affecting the banking sector, we saw that the stock prices for the banking sector went up. And anybody who bought stocks before the repeal of the caps were able to make approximately 54% return within a period of 2 weeks. So the timing of an asset, when you go to talk to your asset manager or investment advisory, try to figure out what information is there in the market that will be able to affect the asset that you're buying, whether it's real estate, whether you're buying commodities, that is coffee, tea, whether you're buying treasury bills. If the government is starved of cash, then they will tend to give better results to treasury bills. So the timing of information that we have in the overall market is very, very key to determine when to enter an asset or when to exit an asset. There's also the aspect of liquidity. Why are we talking about liquidity? I already said about buying real estate. Anybody who has ever invested in the real estate market knows that buying the asset takes a period of time. Some transactions may take 1 month, but if you're buying through a bank financing, it might take even up to 3 months. On the contrary, buying stocks in the stock market takes a few minutes. You go in, put an order, it's implemented, and you can be able to see the whole transaction within a period of, let's say, an hour before the settlement happens after 3 days. Now, at the same time, exiting a real estate asset takes a lot of time, takes higher cost, considering that you might need to get a land agent. You might need to negotiate with your, for example, your financial that you want to exit an asset. You have to find a buyer who's willing to pay you the price that you want to take. On the contrary, in the stock market, you can go in and sell your stock within the same day if the price that is in the market is available. So the liquidity and the ability to transact determines how you're going to hold your asset and for what period you're going to hold the asset. And finally, I can say another thing that is key is taxation. And this is very key if you're investing in foreign assets. All foreigners who invest in Kenya get taxed differently from local investors. All different products get taxed differently. There are those products that get taxed 5%. For example, if you buy a stock and the price moves from, for example, 10 shillings to 20 shillings, when you sell your asset, when you sell that stock, the only thing that they charge you as a tax is 14% on the transaction fee, not 14% on the capital gain that you've earned. The capital gain is the difference between the 10 shillings that you bought the asset and the 20 shillings that you bought the asset. On the contrary, again, and I'll use land because it's one of the biggest culprits in terms of taxation. If you today buy land worth 10 million shillings, and tomorrow you sell the land at 20 million shillings, there's something called capital gain tax. Capital gain tax in Kenya is about 2.5%, if I'm not wrong. It's about 2.5% or 5%, depending, I think it's 5%. Now, that is if you're selling land in Kenya. But on the other hand, if you go to the stock market, buy shares worth 10 million, and the value of that share increases to 20 million. If you sell that stock, there is no capital gain tax that will be able to affect you. So when you're doing an asset, also you need to consider that at the end of the day, if you're going to buy tax, how will it affect your overall return in the market? So That is about asset review. I've talked about the holding period. How long are you able to hold the stock to be able to gain the returns? The lockup period, there are assets that normally have penalties or partial payout. I've also talked about return comparison, the risk, the holding period, and the returns that you're going to gain. There's a timing of the income payment. I did not mention this. For those people who are depending on income, if you've invested money to be able to pay your school fees, to be able to earn overall income, for those who do not have pension or use their pension for investment, if you require a regular income, I mean monthly, tri-monthly, or biannual or annually, it will be very different if you're buying something like commodities that do not give you regular return. So if you have a timing income payment that is due, for example, if you have a loan that you want to pay in the next 3 months, and you have the cash that you can pay the loan with today, you can be able to invest that asset with an essence of timing a payout period so that you can cover the loan within 3 months. So that's another thing that we need to focus on when you're talking about your investment. I've also mentioned about liquidity and also mentioned about taxation. After we've done all that, we've already talked about an individual, what we need to talk about, to look at if you're reviewing you as a client. We've talked about the different common assets that we are able to invest in. And we've also talked about asset review. What's the relationship between the asset and your needs are as an investor. The last thing that we normally advise a client on is to do a company review. A company review is just basically to say that, for example, I want to invest, if I can pick a random company, Britam Insurance. So you need to review the company itself. What is the position of the company with reference to the industry? Are they the industry leaders? Are they the last people? Are they number last in the industry? Who are the management in the company? Has this person ever been involved in fraud? Has this person been recommended, or have they ever won awards in terms of either customer service, payout period, claims payment? So you need to review the company directly in terms of that. And then you need to look at something called a key person risk. If I'm able to take a good example being real estate company, most real estate companies are run by a single individual. The individual is the face of the company. The individual will sell you the land or the house. The same individual will be the one negotiating in terms of financing with you and your bank. The same individual or maybe the spouse is the other CEO or the co-CEOs. That is what we call a key person risk. If these two individuals are not in that company, is that company able to continue running? Or will it fold up with your funds? And a good example, again, unfortunately, I'm able to mention this name, is Suraya Homes. We know that Suraya Homes were run by a few individuals. I believe it was a couple. And they invested and did a very good job initially. And the people who bought real estate through them, or even homes through Suraya, they were managed to benefit a lot. But unfortunately, the face of these individuals came to be tarnished when their names started to be mentioned in the newspapers. So the whole company is pegged on two individuals. So if these individuals are not there in that particular company, then this company is not able to operate. So that is very key to be able to review who runs that company. Now, there's also called corporate governance. Corporate governance is all about how are they behaving with the regulators. If it's a SACCO, are they in line with the SACCO regulators?
if it's a fund managers, are they in good terms with Capital Markets Authority? If it's a bank, and if you all remember that in a few years, we saw 3 banks closing down, and they all 3 were very much affected by corporate governance. So again, corporate governance is key to try and review if you should be able to invest in a company or through a company. Another good example I can give about corporate governance is the Nakumatt supermarket. Again, we remember that the face of Nakumatt and the story we hear after Nakumatt collapsed are totally different. So trying to figure out whom you're investing in or whom you're investing through is very key. Now, another thing again you need to focus on is transaction cost. Every company charges differently for different products. Every company has different type of cost. There are those companies that will charge you a cost as you get in. For example, if you're buying unit trust, there are companies that will charge you a cost if you buy the unit trust today, and the day that when you exit, they will charge you another fee. But there are companies that will only charge you an exit fee. There are companies that will charge you only an entry fee. So the transaction cost between the company and yourself is very key. Remember that every asset that you buy, you will be charged a cost. So if a company that you're investing through charges you high, and then to transact to buy an asset charges you another cost, then your overall return reduces. And this is very key, and this is something else that we always keep on forgetting while you're buying these assets. If, for example, I can talk about,
Willis,
yes?
Willis, just because of time, I'll allow the members present to ask questions, because we are pressed for time.
That was the last point. The transaction cost was the last point. So maybe you can just roll it and they can do the questions.
But thank you so much. Before we proceed on to the, Willis, thank you for the presentation. But before we proceed to the Q&A, I'd like to invite our essay for today, Njoki, to do the essay. Then we can do the questions. If you have a question, you can go ahead and put it on the chat so that we can ask our speaker to answer it. So Njoki, over to you.
Good evening, Rotarians, friends, guests, and visiting Rotarians. Thank you all for making time to attend this fellowship. Now, SA is just generally someone who keeps law and order during the meeting, though I think most of you have been very obedient throughout Castell's talk. Hi, Castell. However, when the meeting started, when Wilson was starting off, kicking off the meeting, we were about 15. Now it's still 46. So be guided by the 4-way test and tuma pesa for your account if you know you're late. That's 1. 2. There was, I'm sure there are people who are at home, seated comfortably from work, did not wear a lapel pin. If you know yourself, please, tuma pesa for his account. The accounts are being projected on our screens, are being shown on our screens. And I would also like to kick off Happy Dollar stroke Sad Dollar. Happy Dollar is something happy that happened to you in the last 7 days since the last meeting. Sad Dollar is something that was not so nice that happened to you still in the last week. We would like to celebrate that. So the spirit for our Rotarians, for our visitors, if anything happy happened to you or sad happened to you and you'd like to share, you give out $1 and you tell us what it is, then we can share you with the same. All the monies that are collected from this meeting will go to our various projects. Lastly, also I want to invite anyone who may have any foundation dollar. This will go to your foundation contribution for the year. So Asante, we can kick off. As you're doing the fines, let me open Happy Dollar and Sad Dollar. Is there any happiness in this world?
Njoki, can I please start?
Yes, go ahead.
Nalwenge here. My $3 is that my presentation has refused to work. So I'm giving him $3 for the presentation. Imeniaibisha kabisa. Thank you.
I have a happy dollar. It is Monday, a very good day for a meeting.
It is Monday.
Njoki, I actually have $3 happy. First and foremost, actually goes to Nalwenge. Even though he says his presentation did not pop up, he didn't have a PowerPoint, his speech was just fantastic. So the happy dollar goes to him. Then the next two happies are actually to how the Mombasa trip has gained traction, and I'm loving it. So I'm happy about that. Thank you.
Any other happy or sad?
I have $1. It goes to the speaker for today. It was quite a good presentation. I've learned a lot. Yeah.
Yes, Njiri, go ahead.
Thank you, Mr. President, acting. My happy dollar is actually, I have two happy dollars. One is to the speaker for quite an interesting topic, and I've asked a question. Hope he'll be able to answer my question. The next one is I'm very happy to see Victor Siundu. It's been years and years. It's just a good feeling to see him around. Thank you very much, and a big up to the speaker.
Go ahead, Bakita.
I have a happy dollar for the speaker. The presentation was very nice and very informative.
Any other happy or sad dollars? Kindly send your contributions to the numbers that are on the screen right now. In the interest of time, I think I will hand over the meeting back to Mr. President to continue with the question and answer.
Okay, thank you, Njoki. Okay, so don't feel left out on the happy dollar, sad dollar. I'll still keep the numbers on screen. So if you need to send, you can send. I have $3 happy. One to the guest speaker. Thank you so much for gracing our club. It was a very, very informative presentation. Second happy dollar is to myself for chairing the first Madaraka meeting. This is practice for me. I'll be president next year. So I'll be appreciative of any support I'll get from all of you who are here today. And last happy dollar is that it was a very good EPL weekend. Manu lost, Liverpool lost, Chelsea won. So very happy for that. Thank you so much. So I'll now take it back to the question and answer. So I see a couple of questions on the chat. If you do want to ask a question, please raise your hand. Then I'll give it over to you to ask the question. But to start us off, there is Benson asking, what are the sources of information of corporate governance? In most instances, one gets to hear of issues after the fact. Over to you, Willis.
Okay. One of the key things normally we do is that we review who is on the board or who is in the management. There's unfortunately some of these guys do not have a track record. Am I audible?
Yes, we can hear you.
Unfortunately, most of these guys might not be having a track record. For example, the former Uchumi CEO did not have a track record, so it's very hard to know some of these things. But there are those who you get red flags way before they're even appointed. The CEOs, the chairman, the board members. Whenever there's that issue, and they're normally listed, and if it's a government entity, for example, KCB and all the others, they tend to be gazetted. So some of this information you'll have to source mostly through historical performance. In the previous companies, how did they run the companies? Were they successful? Did they have challenges and all that? So basically, that is very, very key for that front. The other question was, kindly read for me the other question of switch machines. You're mute. You're on mute.
Sorry. Oh yeah. Sorry. Bearing in mind the current financial difficulties posed by the worldwide COVID situation, how do equities compare to bonds?
As of current, anybody who let's talk about Kenya, because we're in the local domain. Anybody who's investing in the equities market for long term, then they have an upper hand, and especially in particular industries, for example, banking sector and manufacturing. And manufacturing here, I'm talking about EABL. When the environment was affected by COVID, one of the biggest sectors to be affected was finance, considering they offer all loans to all the other industries or companies. And then the other one was EABL. We are a drinking nation, and we know that EABL supports an end-to-end process for investment. So that creates a very challenging environment for them to be able to perform. But along the way, as the economy recovers people are able to make payments on their loans, then those particular industries will be able to recover and be able to gain traction. So if you're looking for money to park, for example, one year or 1.5 years, then equities will be better compared to government securities. On the other hand, if you have short-term money, I'm talking about 3 months to 6 months, then, am I still audible?
Yeah, yes, you
are. If you have 3 months to 6 months, then I will recommend government securities because they have a guaranteed return, and your money will not have very much variation in the 6 months, in the next 6 months. But if you have money that you want to invest for maybe till end of 2021 or mid 2022.
We lost you. Nalwenge? Sorry, the speaker is getting back on, I think. network issues. Sorry, as the speaker joins, Josh, I see you've sent happy dollars, I think. So tell us about it.
Oh, to the guest speaker, happy dollar. Thank you.
Dollar.
Yes.
Thanks. And you should also get a fine. There's a fine coming late. Anyway.
I've already paid. Ukiangalia amount utaona yote nimelipa.
Sasa, I think the speaker, as the speaker sorts his mic, there's also an opportunity to get money for Rotary Foundation. So we have a plea from our foundation director Henry to give as much as we can. It can start as small as $1 to the foundation. So if you can also give out foundation dollars to boost up your contributions towards your foundation giving. So take that to note. Wait, Nalwenge, are you okay now? Is your mic okay?
Yes, I'm back.
Okay, so you sorry?
What was the third question?
That somebody, Njeri asks you to comment on forex trading and the use of bots and robots. Thinking trading.
Oh.
Yeah.
Forex trading has two forms. Number one, it's normally reserved for professionals, and I recommend anybody who has full-time involvement in forex. Reason being that forex is very information sensitive, and if you do not know how to trade, especially there's something called with stop buy, stop sell. If you do not know how to do the triggers for your investments, you might end up losing a lot of funds on that front. So forex, I normally recommend very heavily for people who are professionals, and again, people who have time to be able to monitor that. Another thing about forex is that it best works if you have a large capitalization. I mean that forex tends to move by very, very small margins, mostly cents. So if you have, for example, 5,000 shillings, it might not make much return compared to if you have 5 million shillings. So number one is you need to have a professional to know when to do the triggers. Number two, you need to have a full-time review of the forex market information, what's happening around the world. And then number three, volumes work very well for forex. On the robotics, it's now the in thing, especially in the forex market. Simple reason is because we tend to have a lot of news channeling into the market. So to be able to know when to place, when to stop, when to buy, it becomes very, very slow for a normal human being. So most people tend to use robotics. Another thing is that robotics tend to scan different currencies and to be able to advise which pairs to be able to work with. So if you are able to get to that front, then the returns will be much better compared to if you're doing it as an investor on your own. So on that direction, I'll give a thumbs up for robotics.
Thank you. Then there's a question here from Marion. What happens if you bought shares for the long term and right now their price has depreciated and are worthless? Do you still hold, hoping the price will appreciate, or sell them at a loss if anyone is willing to buy them?
Okay, one of the biggest advice I tell clients is to have an upside and a downside in terms of returns. An upside means that, for example, you say that I want to go and buy KCB stocks, and if it goes up by approximately 15%, I need to stop being greedy, I need to exit because we know it has a wave. On the other hand, I advise clients to have a downside, meaning that this is the much loss I can be able to accommodate. If the stock loses by 5 shillings, am I able to still continue holding in terms of long term? I can give a very good example. If one stock that happened to be in the market and right now it's very cheaply sold and even suspended, Kenya Airways. Kenya Airways stock, unfortunately, we cannot say that we have a potential recovery on that stock. So anybody who's still holding Kenya Airways stock, I'll tell them just to sell the stock and buy something else that will be able to give money to them. The recovery of that company is negligible. If you're holding Uchumi shares, then I don't know how I can pray for you. If you're holding something like Kenya Power, a little bit of an upside, but let's not think that Kenya Power will go back to the 20 shillings that it was in maybe 5-7 years ago. So you have to have a downside where you can be able to accommodate a loss. If you are holding a stock that was being sold 50 bob 5 years ago, and right now is being sold at 5 shillings, you'd rather just sell that stock and get out and go to another stock. So that's my recommendation. Remove your emotions from your investment, accept the losses, and move forward.
Okay, thank you. Then there's another question, same by Marion also. What strategy can one employ to buy shares for a company that are expensive like ABL if they don't have a lot of money to invest so as to get water returns?
Simple accumulation. There is no secret about that if you do not have a lot of funds. We know EABL minimum you can be able to buy right now is about 16,000 shillings. That's about 100 shares. So simple accumulation over time will be able to give you the needed much share that you're holding. Remember again that if you're going to buy a share like EABL, it has a long-term benefit because it has either a capital gain or a share dividend. So if you're looking at a stock and you see that it has a very expensive, they're very expensive shares. Number one, I'll recommend that you continue just accumulating them slowly. We normally have a minimum traded shares of 100 per buy, but there is something called odd lots. Odd lots are shares traded below 100 in numbers. So if you can go into the market and tell your stockbroker to keep on buying the odd lots, they might be slightly expensive compared to if you're buying them in lots of 100, but at the end of the day, you'll be able to buy the shares you need with the figure that you have, in spite of them being a little bit expensive. So there is no secret, simple accumulation over a period of time.
Okay, thank you so much. Then I'll take one final question so that we close. So there's Ronnie asks, can you set profit loss triggers for the NSE shares, or you have to hope that the agent remembers your exit points?
Ronnie, it's your money. It's not your agent's money. I believe that you need to keep on following the same way you follow your M-Pesa balance. Or if you have Fuliza, tell guys not to send money to that account, to send it to another account. It is your investment. It's normally recommended that you follow that investment. Simple reason. I, as the stockbroker, I have about 10,000 clients. 10,000 clients, each of them have bought different stocks. It's very hard for a stockbroker to try and remember which client bought what and when at what price. So I normally tell clients that the day that they come to invest in the stock market, they better keep track of what is happening in the stock market with the company they invested in and the economy in general. Simple. In the stock market, you might find the stockbroker closing shop. We had Nyaga stockbroker run a closing shop with client money. We had Ngenya stockbroker closing down with client money. So you need to investigate or review your stockbroker. The company you're buying. If you're buying EABL, you need to know a guy is drinking, was the economy closed down, were bars operating? So that is for you to be able to track down. And then the state of the economy. If you're going to buy agriculture, an agriculture stock, and we're in a period of drought, basically your stock is going to be worthless on that particular year. So it's easier for an investor to review what they're holding over what period of time, and then to coordinate with their stockbroker compared to a stockbroker trying to figure out which client is holding what and over what period of time. So it's very difficult for me to advise you that I will remember as a stockbroker to be able to advise you the up and down triggers.
Great. Thank you so much for that presentation. I will now hand it over to Rotarian Biama to give the vote of thanks.
Thank you so much, Rotarian Wilson. Now, with Rotarian Nalwenge, I just don't even know where to begin. But just to be honest, with over the 10 years that I've actually known Willis, this is amazing from him. And of course, he's always been amazing. But what I can just emphasize on is the talk that you've actually given us, the insights you've given us to the stock market and the money market. I mean, this has been amazing. And I believe people here, I'm just saying, let's say chats that are being sent or being sent on the side is we'll definitely want you back, Willis. This has really touched us, and especially this time for COVID-19 with the investments going haywire. It's been amazing. So what you can say, we as Madaraka are honored to have had you here today. And we're looking forward to future partnerships, and thank you so much. So I'll just ask members that are still here just to give a round of applause to Lieutenant Willis for that outstanding talk that he's had with us today. Thank you, Willis.
Thank you so much, Willis.
Thank you very much.
There's somebody who's requested for your contacts so that we're able to get in touch with you. So if you don't mind, you could send your contacts on the chat so that they're able to get in touch with you.
Okay.
Thank you, members and guests, for attending this meeting. We've now come to the end of the meeting. I appreciate your time here. I don't take it for granted that you took off time to come and attend. So we're very, very thankful for that. So the final toast, in conjunction with the Rotary Club of Bungoma, Rotary Club of Karen, Rotary Club of Meru, and the Rotary Club of Westlands, Rotary Club of Kampala Metropolitan, Rotary Club of UN Afia, Rotary Club of Nairobi South, Rotary Club of Embu, Rotary Club of Nairobi Parklands. I give you Rotary and the world over. Thank you. Thank you very much, everyone. Enjoy the rest of your evening. Hope to see you next Monday, and do have a blessed week ahead. Thank you so much.
Thank you.
Thank you, Wilson. That has been amazing. Presidential material, huh?
Thank you, guys. Cool, guys. Thank you so much, Akina, Biama, Liz. Thank you so much for helping out. And Joki, I don't know if she's disappeared, but thank you guys for helping out. And Meshukuru sana. Mokami, thank you so much.
Thank you, Mr. PE.
PE, soon to be president. Yeah, thank you, Liz. So good night, people.
Good night.
And guys, just pay up your deposits for Mombasa. Come on.
Yes, we should.
Thank you.
Thank you.
Good night.
Good night.
Good night, people.